Hello guys, and welcome back. It seems like crypto will never end, and all this market will continue to grow, and grow big. And of course many of you who is listening is interested in crypto space because all of us like to earn some extra money or build a great income in this space. There is many ways how to do that. Most favorite one is investing or trading. And there is many options how to make passive income. This episode is about how to build passive income. Every day by researching this market and new project, we have found incredible one. Today we will talk about Compounddefi. And what is Compounddefi? And how much you can earn with this project? We will cover those questions in our episodes. In a short term, the encryption economy is a new imagination of the future financial economy. The Compounddefi blockchain protocol, a decentralized central bank, establishes a cryptocurrency market through smart contracts. Compounddefi is one of the most popular decentralized platforms ever. Compounddefi helps USDT holders to automatically explore the borrowing needs of the cryptocurrency market, automatically match high interest orders, and automatically earn floating interest rates. Your deposit is always in your own wallet, and you can withdraw the earned interest to your wallet at any time. Join Compounddefi, hand over to the smart contract agreement, and automatically earn income. Compounddefi is a platform that allows you to generate high returns on your cryptocurrencies and manage your funds in a completely transparent environment. 1. Easy to use. Our web and mobile applications are designed with ease of use and simplicity in mind. 2. Beat market volatility and earn competitive returns when you invest with our DeFi-powered services. 3. Full transparency so that anyone can verify our nodes and rewards. 4. Safe and secure. We have implemented the best industry-leading technology covering safety and security. Compounddefi's mission is to change that, building tools, products and services for the decentralized finance, DeFi, ecosystem. We think you got an idea on first impression. So, how it works? It allows USDT holders to automatically explore the borrowing needs of the currency market, and automatically match higher interest orders, after agreeing to authorize the execution of this contract, becoming a miner. It is an AMM mechanism and an automatic quantification procedure. Your deposit is always in your own wallet without withdrawal, and you can withdraw the interest earned to your wallet at any time. Become a miner, hand over to the smart contract agreement, and automatically earn income. That kind of project for newbies can be at first difficult to understand. What is Compounddefi? So again, Compounddefi, a blockchain agreement. It is like a decentralized central bank that establishes a currency market through smart contracts. The money market is based on the supply and demand of assets, and the interest rate of the asset pool is derived through algorithms. Providers of USDT assets, participants, we call them miners, directly interact with smart contract agreements without any actual mortgage, and automatically earn floating interest rates, without negotiating maturity and interest rates or collateral, and other with peers or counterparties terms. Where this project is going? The crypto economy is a radical new imagining of the future of work. Open protocols will create transparency and opportunity, enabling anyone in the world to contribute their talents to a global economy. We want to support this vision and build the new coordination mechanisms of the internet age. Services. Compounddefi is one of the most popular decentralized platforms ever, and those users are now entrusting the platform with over $5 billion in funds, high interest yield, paid daily to you and your customers, on-demand liquidity, free transfer of funds with no restrictions, transparent reporting, real-time balances and transaction history available on demand. Well, in this app screenshot you can see in what time frame what amount you can earn. It is always better to jump faster and be in front of the market or a project. So, let's go also to app. Download Defi or any other wallet app like SafePal. And go over your mobile browser to defi.compounddefi.org and connect app to this website URL. And you will be in a pool. In app you can hold many different cryptocurrencies. So, let's analyze this app. How do I need to join? Click receive above, you will receive a $100 voucher, which can only be received once, for a period of 3 days, and the mining proceeds generated by the voucher can be withdrawn. After the experience is over, you need to make sure your wallet has a USDT balance of 100 or more in order to continue to earn mining revenue. How do I withdraw money? You can convert the currency generated every day into USDT, and then initiate a withdrawal. USDT withdrawals will be automatically sent to the wallet address you added to the node. Other addresses are not supported. The first withdrawal requires payment of a certain ETH or TRX miner fee, which is used to authorize Compounddefi to transfer the mining income to your wallet address. How to calculate income? When your wallet balance exceeds 100 USDT, The smart contract starts to calculate your address through the node and start to calculate the revenue. What are the extra gains? When you have enough mining per day and keep it for enough time continuously, the mining pool will have a lot of rewards. For more details, please contact online customer service. About Compounddefi. Compound is an algorithmic, autonomous interest rate protocol built for developers to unlock a universe of open financial applications. We are a Defi project that automatically distributes rewards to liquidity providers through smart contracts. What is Defi? Defi, or decentralized finance, is an umbrella term for financial services on public blockchains, primarily Ethereum. With Defi, you can do most of the things that banks support: earn interest, borrow, lend, buy insurance, trade derivatives, trade assets, and more, but it's faster and doesn't require paperwork or a third party. As with crypto generally, Defi is global, peer-to-peer, meaning directly between two people, not routed through a centralized system, pseudonymous, and open to all. Why is Defi important? Defi takes the basic premise of Bitcoin, digital money, and expands on it, creating an entire digital alternative to Wall Street, but without all the associated costs. Think office towers, trading floors, banker salaries. This has the potential to create more open, free, and fair financial markets that are accessible to anyone with an internet connection. Defi. What are the benefits? Open. You don't need to apply for anything or open an account. You just get access by creating a wallet. Pseudonymous. You don't need to provide your name, email address, or any personal information. Flexible. You can move your assets anywhere at any time, without asking for permission, waiting for long transfers to finish, and paying expensive fees. Fast. Interest rates and rewards often update rapidly, as quickly as every 15 seconds, and can be significantly higher than traditional Wall Street. Transparent. Everyone involved can see the full set of transactions. Private corporations rarely grant that kind of transparency. Why Defi becomes very popular and everybody in crypto community starts talking about it? A new movement is pumping oxygen into the cryptocurrency industry despite asset prices that remain 75% lower than where they were in late 2017. It's called Defi, short for decentralized finance. It's the notion that crypto entrepreneurs can recreate traditional financial instruments in a decentralized architecture, outside of companies' and governments' control. And with fresh allegations of misused funds against the centrally controlled cryptocurrency Tether, the argument for decentralized applications has become even more relevant. Bitcoin and Ethereum are the original Defi applications. Both are controlled by large networks of computers, not central authorities. Many investors use Bitcoin like gold, as a store of value investment that protects against inflation, while Ethereum has been instrumental and controversial in helping startups crowdfund their operations. But newer apps are dominating the Defi conversation. The stablecoin DAI is a Bitcoin-like digital token that aims to be a global currency untouchable by central banks. Unlike Bitcoin, its value is pegged to the US dollar, drastically reducing the volatility that prevents Bitcoin from being practical for everyday purchases. Compound is a crypto version of a money market fund, letting users earn interest. Dharma lets you issue and underwrite debt to gain investment returns. The goal of Defi is to reconstruct the banking system for the whole world in this open, permissionless way, says Alex Pack, managing partner at Dragonfly Capital, a $100 million crypto fund. You only get that shot every 50 years. Salil Deshpande, a partner at Bain Capital Ventures who leads the firm's crypto investments, thinks people first became interested in Defi because they have a libertarian streak. They like that they can build censorship-resistant products, and some developers are simply fascinated with the technology and its capabilities. The most powerful effects of Defi applications, Deshpande says, will take shape over the long term. He points to Venezuela, where a steep drop in oil prices and poor government policies like printing vast amounts of money have crushed the economy, with inflation exceeding 1,000,000% last year, according to the IMF. Central banks are just people, and people make mistakes, Deshpande wrote in a 2018 blog post. Decentralized financial applications can make our financial systems more transparent, more resilient and less fragile, he says. Jill Carlson, a former Goldman Sachs trader and strategy lead at blockchain company Chain, has been researching how Venezuelans are using digital assets to combat hyperinflation as part of a nonprofit she co-founded, the Open Money Initiative. Crypto is not saving Venezuela, she says, but Bitcoin is being used by small numbers of people as a tool to protect against inflation and to send money to family members in other countries. DAI, the most widely used DeFi application not counting Bitcoin and Ethereum, has spiked in popularity over the past 6 months, although adoption remains very low. About 21,000 people currently hold the asset, and in early April, it hit a peak number of daily transactions at 13,490. That's up from less than 500 average daily transactions in the first few months after it launched in late 2017. The software behind DAI is technologically complex and consists of over 1,000 lines of code, which is a lot for crypto, Dragonfly Capital's Alex Pak says. It lays out rules for how new DAI are minted and how the system is maintained. For example, to create $100 worth of new DAI, users must pledge $150 of Ether. They must also pay an interest rate or stability fee, because they're borrowing DAI when they create it. DAI has a sister currency called MKR, and people who hold MKR vote to determine DAI's interest rate. 2% of all Ether, or about $339 million worth of Ether, is locked up in DAI. Compound has about $34 million in locked Ether, while Dharma has roughly $10 million. The stablecoin Tether has much more usage and adoption. It surpassed 44,000 transactions on April 4th, according to Coinmetrics. But it's not decentralized, since it's managed by iFinex, a widely scrutinized Hong Kong company recently accused of moving money from its Tether stablecoin reserves to cover up for $850 million in missing funds on its Bitfinex exchange. Such incidents make the case for a decentralized currency even more compelling. Despite the potential for noble use cases of DAI, like helping residents of troubled countries, people are primarily using it to make bigger, leveraged bets on Ethereum. Investors can pledge Ether to borrow DAI, and then use that DAI to buy more Ether. A second use case, traders who want to exit out of a volatile cryptocurrency can swap it for DAI instead of a fiat currency. DAI is also being used as money by financially underserved communities, such as many people in South America, says Rune Christensen, CEO of the Maker Foundation, the nonprofit that built DAI software. What are the biggest risks of DeFi applications? The smart contracts could be hacked, Pak says. There could be a backdoor that allows someone to steal all of your keys. But you're trusting in open source code? Over time, many eyes are looking at it. Christensen notes that DAI software has been audited 4 times by well-respected security research firms like Trail of Bits. While the DeFi movement has many fans, some traders don't think it will move the needle on cryptocurrency adoption. Technologically, I think it's brilliant, says Jeff Dorman, Chief Investment Officer at digital asset management firm Arca. But he sees more promise in a stablecoin created by a large company with many users, pointing to recent reports that Facebook is working on one. Ultimately, distribution wins out, he says. Dorman doesn't mind that Facebook's coin would be centralized. That's why so many passionate libertarians and government anarchists are in crypto, he says. They see this utopian future that we one day might get to, but we're not getting there overnight. So let's walk before we run.